believe that the big boxes will get closer to cities. The trends from the e-commerce, especially with reverse logistics, will drive demand for more satellite warehouses around the cities, smaller buildings, 10, 15,000 square meter with the 100,000 sitting maybe 20, 30, 40 kilometers outside, and then satellite warehouses in order for this last mile delivery, and especially reverse logistics. One of the features online is that I can send it back if I don't like it or if the size is not right. So this has created also another demand or requirement from e-commerce users. And we've seen, starting seeing Amazon also implementing this. I mean, we've done a deal lately with Amazon in the US, in California, with a couple of satellite warehouses closer to the city's 10,000 cross-dock facilities in order for this last mile delivery and reverse logistics as well.
I think it presents challenges actually for us in the capital markets, essentially, is one of the main points I want to get across, because there's this slight frustration between the new types of buildings that are required from the retailers for their big regional distribution hubs, and we've touched on a couple of names, but there's a selection there who need these bigger facilities, and then also down to the spokes, if you like, and these fulfillment centres and these smaller cross-dock facilities. And there is a gap generally in the understanding and pricing of the risk of and the operation of those buildings and the longer term requirement for them, which isn't currently being filled in the capital markets. And there's a bit of a liquidity issue as a result. In the US, I think that market's much more mature, much better understood, and priced very differently, and there's a different liquidity. And I think 2013 could be the year that starts to change for Europe and the understanding of that new growth part of the business. I think there are very few parts of the world economy and industries that are seeing the types of growth rates that are feasible for e-commerce-led logistics, which I think is quite an exciting thing. But getting traditional investors and funds within Europe to buy into that at the moment is a bit more of a challenge. But we can maybe come back to that.
So you're seeing this year, if you like, 2013, as potentially a window that is only going to be open this year, almost.
No, I think the trend will continue, but I'm hoping that this is the year where we start to see investors accept the growth of that part of the industry and the types of buildings that are required for it, and start to price it accordingly. I think 2013 will be a bit of a shift in that, and we're starting to see certainly the developers and the guys that are talking to their customers understand this, and we're starting to see global investors and pools of capital, and certainly guys from the US and the conversations I have with colleagues over there, looking at the industry over here and saying that there's a disconnect, and the risk is being mispriced at the moment.
Is that just to pick on? I mean, are you talking about these last spoke facilities, the sort of smaller cross-dock ones? Because there's not. I mean, as an investor, it strikes me at the moment there's not a lot of that product to buy. But is that because the developers are not willing to do it because they feel the markets won't price it properly?
Well, you should ask these guys. But I think there's a difficulty there, because for the retailer, let's say, without mentioning any names, they need particularly large facilities, and the largest units that are being taken at the moment, facilities are being developed, and the largest take-up is coming from the likes of Amazon. But when you capitalise that, that's a big chunk in one asset. So there's a kind of sticking point there in terms of the quantum and volume that the market can absorb currently. And then equally at the other end, if you're looking at parcel fulfillment centres and cross-docked and they're skinny buildings and you don't store anything, it's all about the technology that's in them and the throughput and the shipments per hour that these facilities can handle. That needs to be improved to match the growth of the retailers, and the typical kind of lot size of one of these buildings might be sub 10 million euros or just over, which is probably too small or not in the target range of most institutional funds, that are looking for typical logistics buildings.
Mm.
And it's undersupplied as well at the moment, and the two go hand in hand, I think.